Let's put the spotlight on gold, and today it is trading with gains of nearly 0.5% to trade above the $3,650 per ounce mark. Now remember, as traders expect Federal Reserve Chairperson to lower rates in the meeting that is scheduled to happen next week, and largely the expectation is that Federal Reserve could cut rates by as much as 25 basis point, and there is growing speculation that perhaps it could be hiked by about 50 basis point as well. So everything depends on the kind of outcome we get from Federal Reserve meeting next week. But if you look at the kind of returns gold has given over the last 3 years, in 2023 gold shot up nearly 13%, followed by a solid 27% return last calendar year, and this year so far gold has shot up nearly 38%. Rising geopolitical tensions have aided safe haven demand in the global market, and global central banks continue to buy gold. So these are some of the factors which continue to aid global demand for gold, and that is the reason gold prices have continued to rise steadily over the last 3 years. But despite the up move, brokerage houses continue to remain very positive. Goldman Sachs has now given a target of $3,650 per ounce. This is by the fourth quarter of calendar year 2025. JP Morgan at 3675, and Morgan Stanley is even more bullish. They've given a target of $3,800 per ounce by the fourth quarter of this calendar year. So gold prices clearly in the domestic and in the global market continue to surge, aided by several factors. But what kind of impact is higher gold prices having on demand? To discuss this, Nitin Kedia, National Secretary at All India Jewelers and Goldsmith Federation, AIJGF, is now joining us. Mr. Kedia, afternoon, and thanks so much for taking your time out and joining us here on ET Now. Now with domestic gold prices at what, 1,07,000, 1,08,000 rupees per 10 gram, what kind of impact are we seeing on ground, since you deal with customers directly? If you can tell us demand impact of surge in gold prices.
Good afternoon, Ashisha. I think in last 2 months, this is the first time that I have so much a smile in my face, and I'll just explain the reason. But first of all, let me thanks to you for the lovely update that you gave in the social media in the morning, and that really help us to cope up with the fundamental news that we get through you. So I just, on behalf of Jewelers Fraternity and from AIJGF, I thank you for that lovely update. And the second thing, when about this demand, is it's really surprising, Ashisha, that for last 4 or 5 days we have seen a rise in demand significantly. And let me tell you that from last 3 months we had a disparity in the market, and the disparity means that the prices that were trading in the market that were below the import price. But what has happened in last 3-4 days, that the prices, the parity has came. That means the prices and the import prices are same. In fact, in few cities, we are seeing that the demand is so high that the local prices have crossed price, and this is the first time it's happening during the price when the prices are rising. So, moreover, this is the Pitru Paksh time, and most of the time we don't see a demand during this period. But this time the customers are coming in the shops and they are just booking the gold. They are giving the advance amount and they are saying that will come during the Navratri or later, and we'll pick the gold. So this kind of demand, this is literally surprised us, and actually we were not ready for this kind of demand, Ashisha.
Understood. So then what are your expectations for from the upcoming festive and wedding season? Do you expect, I understand in value terms it is going to be higher than same time last year, but in volume terms, what are your expectations from the upcoming season? All right, we'll try and fix that in just a bit. But Mr. Kedia, if you're back with us, I understand, since you were just telling us that demand continues to be on the higher side. Currently, on account of Pitru Paksh, demand is lower, but order bookings for the upcoming season have been on the higher side. So my question was with respect to demand in the upcoming season, upcoming wedding season, in volume terms, if you can tell us what kind of growth or degrowth are you expecting versus last year?
In volume terms, I think we'll be down by 20-25% or maybe 28% this year, because the prices, as you told, that 37% they have gone up, and mostly the gold is not something that somebody can plan in the afternoon that today I'm going to have pizza or burger in the night. It's a planning that goes for 6 months or 8 months, and after that they save the money and they come to the showroom, and after that they buy it. So the saving that is being done, it is being done on the amount. Let's say I have saved 2 lakh rupees and now I'm going to buy a gold chain of 2 lakh rupees. It's never like that, that I'm going to buy 10 gram of gold or 5 gram of gold other than wedding season, other than the wedding purchase. In the wedding purchase also, we have seen that the budget is now playing a major important role. So we may see around 25 to 28% decline in demand in volume terms for this upcoming season. So we are expecting that somewhere around 110, 115 ton demand would be there in the last quarter. And we are more fearful this time about the demand because the trends which we have seen in last 3 years, whenever the demand picks up like um, uh, sh- uh, it has picked in last 3 or 4 days. Generally, it is followed by a very sluggish or low demand. So definitely we are fearful. And in the next 3 or 4 days, we have called a meeting of all the leading jewelers and wholesalers of India, and we are discussing that what kind of activities which we can do at the showroom levels or the city levels where we can increase the demand of gold. And in line to that, World Gold Council has also launched a campaign for Gen Z to attract them to the gold investments. Ashisha.
So that's as far as festive demand is concerned, and perhaps Jewelers Association will come up with some kind of schemes in order to lure customers. But if you could also tell us, how is the investment demand picture looking like? Are customers actually buying gold for investment rather than consumption?
Last year, we had an investment demand growth of 7% in gold, but this year, I'm not seeing at this current level the investment demand is coming. The brighter picture for us is that the investors are not coming for a sale because we have seen in past history that whenever price rises by 10 or 12%, the customers comes to shops and they sell the gold and they again wait for correction to buy it. I think now the people have accepted that the price may be around 1 lakh for a couple of years. So that's the reason people are not coming for to sell their old gold, but definitely they are refraining themselves to buy gold for the investment purpose.
Understood. And are you also seeing a shift in trend from gold purchases to diamond purchases, especially because of the emergence of lab-grown diamonds? Are we seeing demand shift from gold to diamond and other allied products then?
I think the early trends are being seen, but it's not something that as a gold jewelers we should be worried about because gold is gold.
At that point, Mr. Kedia, thank you so much for taking your time out and joining us here on ET Now and helping us understand what the demand trends are looking like. And perhaps the industry is mindful of the fact that demand could perhaps decline on account of surge in gold prices. Remember, gold prices have shot up 37% this year so far.